We were discussing a situation that you were on my talk show a week or so ago.
Yeah.
It was alarming when I read the headline and the story, and I said I need Clinton Wilkins to offer some clarity. So instead of me describing what the story was all about, I'll defer to you, the expert.
Sounds great. So there are some lenders in Canada, primarily bank lenders, brick and mortar lenders, that have a variable rate mortgage which have a static payment. And what's been happening is, as the interest rates have gone up with the Bank of Canada, the amount of principal and interest payment has not been covering any principal. Basically, the amount of the payment has not even been covering the interest, which means the amortization has been negative, and every month that goes by, these borrowers owe more than they did the previous month, and that's considered a negative amortization. Obviously, it's a negative situation for a borrower, and a negative situation for the lender. Their risk level basically has increased every single month, and the federal government is not cool with this. They don't like it. They want borrowers to make sure that their payments are at least covering the interest, and they are proposing or actioning or putting legislation into place that these amortizations cannot exceed 40 years. So when a payment would get to an amortization of 40 years, it would then trigger, and the payment would need to go up to go back to the original amortization. Not every lender has an adjustable payment. By and large, most of the lenders that we deal with that have a variable rate mortgage have an adjustable payment. So our clients are not that concerned with this.
Do you have anybody in this situation?
We certainly do. And my personal mortgage has a static payment, and I'm in a variable.
Right. So the advantage of the static payment is what?
Is your payment stays the same, but you have to self-manage. You have to do a payment increase. You have to do a lump sum payment to make sure you're keeping your amortization in line.
So what type of client would be ideal in order? Somebody who has extra income or savings?
I think people that have extra savings that could do a lump sum payment, a static payment works out great.
Right.
In a raising rate environment, clients do not want a static payment.
No.
They wished that their payment would have increased and kept their amortization in line. By and large, Canadians want to pay down their mortgage. This type of mortgage, it's great because you know what your payment is, but not great if you really want to pay your mortgage down, especially in an increasing rate environment.
So we've heard something like amortizations, crazy numbers based on this.
100-year amortizations.
Yeah.
In
That's it. But
amortizations that are basically infinity, because if the payment isn't covering at least like $1 worth of principal,
right,
the amortization is negative.
But that's not going to play out.
Forever.
Or is it? Or is it?
It will until these mortgages come up for renewal, and these borrowers are going to get a real surprise.
Yeah.
They're going to get a real surprise because then their lender is going to want to bring their amortization back in line, Todd.
Yeah.
So what happens if you go from amortization of infinity and have to go down to 20 years?
Yeah.
You are going to get a wake-up call. People.
1,000 more a month, potentially?
Who knows? It depends on how much you owe, and it depends where the rates are at that time.
Right.
Not every lender acts like this, though. Not every lender does. So I think that's where you really need to understand the type of mortgage that you have. And I have these conversations with borrowers because some lenders that do have a static payment will let it go up until the payment is not covering just the interest. Then they'll say, okay, we got to reset, or you have to do a payment increase. Other lenders have a trigger rate. If the rate gets to this point, then the payment is going up. And it's really a conversation that a lot of these lenders are having with borrowers. But some borrowers are just in a situation where they don't want to increase their payment, or they can't make a lump sum payment, but that's not sustainable.
No.
Especially when it comes up for renewal, that's when these borrowers are going to get a wake-up call. I know in our last segment, we really talked about these fixed rates, and I'm so concerned, and it keeps me up at night. Borrowers that have these very low fixed rates that are coming up for renewal because they're getting a big wake-up call. But these variable rate clients that are in a static payment, if they've not hit the trigger, or if their lender will never trigger it, is really very concerning.
Okay, so is this a gap perhaps in lending rules? Should this have been allowed?
I think it is a gap.
Yeah.
I think if you have a mortgage and you're making a principal and interest payment, in my personal opinion, your amortization should never get longer than the amortization you took out originally. That's just my opinion. I prefer a variable rate mortgage with an adjustable payment. I prefer that. And I believe it's safer. I think borrowers, want to pay down their mortgages. I think that their amortization staying in line is a good thing. And, that's the way that I prefer to have a variable. Not every lender acts like that, though. It's just that's the reality. Every lender is a little bit different. And that's why I think dealing with an unbiased mortgage professional right now, Todd, is just so important.
All right, so let's go back. I know that we're talking a lot about interest rates, but why wouldn't we, right?
It's a hot topic, and it is a crisis.
That's right. So we can remember a number of years ago when it was interest rates were at historic lows. You mentioned 1%. And Tiff Macklem, of the Bank of Canada, they were basically promoting this, saying now's the time to
borrow money.
Go borrow money, spend money. So was that somewhat reckless or irresponsible based on what we're now seeing?
I don't think they had the foresight that inflation was going to be out of
okay,
control, because
that's
inflation was negative at that time.
I get it, that's fine, but you don't have the foresight. But that you're supposed to be able to be the person on the watchtower,
prudent,
right? The guy on the wall who's supposed to. He's paid the big money, and you're supposed to be able to potentially not predict a pandemic. But I just think that a lot of people were sold. I don't want to say a bill of goods, but yeah.
And Tiff Macklem actually said that the rates were going to be low for a very long time. That did not end up being the case.
Right.
And myself included, we take all the information that we're given from the Bank of Canada, from economists. We're always gathering information.
Yep.
And, just like when the pandemic first struck, we're like, this is going to be 2 weeks. This is going to be over. You know what I mean? Like, we're going to get back to normal. Things are going to continue. And then things just keep dragging on. And that's why you have to be able to pivot, and you have to be able to change perspective, and you need to fall on your sword sometimes that, the information is changing. And right now, I think the rates are going to be high for some time. I think they're going to be high into 2024. And then if inflation comes under control, I think rates are going to start softening, but rates are going to go down a lot slower than they went up. I guarantee you.
Yeah.
That I will tell you.
Yeah.
And I'm not an economist, Todd.
Right.
You can call me a barstool economist or whatever, but luckily I do get called on for the advice and, share my opinion. And this is my opinion. And, sometimes opinions are right, sometimes they're wrong. And sometimes these are predictions based on, information that I've gathered from economists, from, lenders and things like this.
So I would think that that pre-existing builds would not be as impacted as new construction, and new construction is what we really, really need in order to help deal with alleviate the housing crisis, obviously. Right?
Yeah, we definitely need a lot more new construction of all types of properties.
Right. Yeah.
So I'm not just talking single family homes, because I think sometimes when we think new construction, we're thinking like, the McMansions, and we're thinking like beautiful, big new construction single family. That's not what I'm talking about. Yes, we need those, but we need all styles of housing. We need townhomes. We need multifamilies. We need condos, apartments. We need all types of housing right now.
Yep.
On my way here to record, I heard a news information on City News. Listening to the news wheel saying that HRM has partnered to put up a bunch of small, tiny homes outside of Sackville. So I thought that was very cool. I think they were doing like 50 units or so. And these are the things that we need to do. We need to start thinking more outside of the box. And, Halifax Regional Municipality certainly has been doing that as well, changing their legislation around, laneway homes, second units in people's homes and whatever. We need more density on the peninsula. I drove here today along Roby Street, and there's so many lots ready to go that are ready to get buildings going. And I think through these huge, big corridors in Halifax, this needs to be all tower, because it's much easier to have the density that core, especially around things like transportation. And, then people can walk, and we can build more density in the downtown core.
Yeah, we don't need sprawl. More sprawl is not.
Sprawl is expensive, and sprawl is not good for residents. As much as we sometimes want to protect the historic, and we want to, prevent, all these towers. The towers will be good for building more density in the core of Halifax, which I am for.
Indeed. Mortgage 101, your guide to homeownership. We'll be back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.